Good morning, everyone, and welcome to our webinar. My name is Nisha. I am one of the marketing reps here at AIM. Today's webinar will be recorded and later posted on our website. This does mean all attendees will automatically be muted so that we can get a quality recording this morning. If you have any questions, please feel free to type them in the chat box and we will try to answer them throughout the presentation. But if we are unable to get the question, we will have a member of our marketing team reach out to you individually to make sure we get those answered. We do have a webinar every Wednesday morning at 9 a.m. Pacific, so keep an eye on your email or our website to get signed up for the next one, which will be about LifeSecure's Ancillary Lineup by Don Erickson next Wednesday, April 17th. Excuse me. With that, I'm going to hand it over to Derek so that we can finally get started this morning. Take it away, Derek.
Thank you for that, Nisha. Well, I'm excited to be here with everyone today. Sorry for that slow start. We were going through a couple things here with the computers. Luckily, as Nisha kind of pointed out, we do have Curt here, who's an internal account manager. He's going to be running through some kind of things that really help GILICO as well as their product line stand out. Pretty excited to hear this. I've had a lot of agents calling in asking questions, and they're pretty excited to see really what GILICO has to offer and kind of why they're a great choice in the industry. And with that, I'm going to go ahead and say, hi, Curt. How's it going?
Derek, can you hear me?
I can hear you.
Awesome. No, I'm doing well. And it's a pleasure to join you all this morning and appreciate the opportunity to join you too. So looking forward to sharing a little bit of who GILICO is for those who maybe have never used us before. And there may be some changes and updates we've had over the last couple of years too that may pique some interest as well as prompt some other questions. So looking forward to the opportunity to spend time with you guys this morning.
Perfect. Well, with that, I'll go ahead and kind of let you dive into it, and we'll let you take the reins.
Awesome. And I don't know if my webcam needs to be shared or not, if it's distracting. I just want to make sure that my slides are showing too, and that's what's kind of on the screen, and then you can hear my voice too. So if I stop my webcam here, you guys, Derek, can you confirm, can you see Wealth Choice in the middle of the screen here?
We can, yeah. Everything's
awesome.
Looking good.
We're in good shape then. Well, yeah, like Derek mentioned, I'm an internal account manager here within GILICO, or Guarantee Income Life Insurance Company. I support our primary account manager, our wholesalers with our key accounts. And with that too, I have the opportunity to work with your organization and AIM here. I know we've been, I believe, with your organization for almost 3-ish going on 4 years, specifically tied to the launch of our asset-based long-term care product, Annuity. I'll get into a little more information on that as the webinar goes on, but really have had some good opportunities to work with some colleagues of yours who may be more in the long-term care space, but also having the opportunity to ask the questions to see that there are some other needs there that we may be able to complement what you guys are already doing well with what our current lineup is. I would say GILICO, where we're winning some business currently in 2024 is with the combination of our fixed indexed annuity and our fixed annuity. And primarily our Wealth Choice has had some of the more recent updates to it, which is why I first wanted to start with, on top of just my contact information, you can see there in the bottom right of the screen of just Wealth Choice, which is our fixed indexed annuity again as well. And as I go to the next page or slide here, I know there's going to be maybe a range of listeners who, again, have heard of GILICO or haven't. So I first just really quick and briefly wanted to start on a little bit who we are. Guarantee Income Life, or GILICO, we've been around for almost 100 years. 1926, it was founded in Baton Rouge. It was primarily just a regional MIGA carrier. And then Couvert, as you'll see in 2016, kind of a holdings company, if you will, purchased GILICO with the infrastructure that we had, the good bones that we had, kind of juiced our assets, if you will, and gave the company a good ability to now kind of branch out to being more of a national carrier too. You know, branching more from just the MIGA space, fixed annuity space, if you will, to having an annuity care, an asset-based long-term care product that, again, we could put some funding behind to get creative on, but as well as now getting into the fixed indexed annuity space. In 2016, when Couvert bought GILICO, it was doing about $100 million in sales. Other slides that I'll show you too. In 2022, we eclipsed over 1.2 billion in sales, and then last year we ended the year with 2.6 billion. So saying all that is we've got a strategic conservative mindset to our growth, and we're super excited for the various intra workings that Couvert offers GILICO to be able to continue to offer some competitive products, but also growing at a conservative organic pace as well too, not trying to do too much with too little, take on a lot of risk on our books on that end, the side of things. This is a little bit of a snapshot into our financial strength. You'll see we're currently an A- carrier. In October of 2022, we went from a B++ to an A-. We were able to hold that throughout 2023 and start 2024 here the same, with obviously the goal of continuing to be more reputable, be a carrier that obviously can hold that A- and continue to grow there too. But we've gotten there with the help of our leadership. If you were to hop on Couvert.com, you're going to see a nice leadership mix of individuals who've maybe been with some larger carriers that you're familiar with, but taking those concepts, bringing it more to a middle market focused carrier, which is our goal. We want to create products that are going to speak to more middle America, if you will, both on how they're built, but as well as what their purpose is in the market too. So with that, we've just got a nice organic growth going on too, that we can share more information with your AIM team if you have more questions on our financials. Here's a little snapshot of just our business as a whole and since 2019. It'll give me a good segue into speaking about the product offerings that we offer. Again, right now, currently in the fixed index annuity space. Like a lot of carriers are going to, I'll just speak to the environment over the past 12 months, right? Or even more, 18 going on 24. It's just been a different environment in the landscape of annuities and interest rates, right? And my experience with the industry is probably going to be limited in comparison to some of yours as well. Where all I've known really are just some of these higher interest rates, and that stemmed to our asset-based long-term care product or annuity care, but obviously into MIGAs or fixed annuities and then fixed indexed annuities. We got a lot of emphasis within our FIA space, which is the direction the company wants to go. You'll look at our long-term care column here as well, and this was our annuity care product. Want to start the call off that it is definitely a product that when people heard GILICO, they immediately thought of was our ADL tripler, right? Unfortunately, at the end of 2023, so December 31st, we did sunset the product for a couple different reasons. And I'm happy to answer questions, you know, at the end of the call too, if there's other concerns around that as well. But you'll see just kind of to the total pie chart of how much annuity care made up our sales in 2023, which was, $625,000 of our almost, when we combine all our carriers that we have access to, we own Couvert owns another carrier called United Life, you may have heard of. They're our way into the financial institution or the bank channel. We did about just 3.5 billion total, and 625,000 of it was annuity care. So we took a look at that as what wasn't working, and what we realized was it was a great product, but just didn't keep up with the times and technology. That makes sense. Where we were noticing with our paper app, using a third party, some of the communication within too just got clunky, created a poor experience for some agents and advisors and their clients, where if that was their first experience with GILICO, it wasn't going to be a good one. So in noticing where the sales were going, but as well as seeing where like Equitrust and some other carriers were coming out with some other asset-based long-term care products, we really wanted to take a step back and kind of see how their philosophy of having a tiered system, for example, works. Obviously, Washington doing what they did a couple years ago with long-term care requirements and so on and so forth. Other states talking about that too. We're keeping a finger on that pulse, want to see where things shake out with what Washington did, but as well as what other carrier or states may pick up on, but as well as how more of these electronic features and e-app experiences on the long-term care side of things go. As we watch that, we're going to continually try to put together what we call our AnnuityCare 2.0 to come out. So wanted to address that. It's currently sunsetted. We don't have access to it. So what we've done is we've gotten creative with our fixed annuities and our fixed indexed annuities, our wealth choice and our guarantee rate lock to be able to offer like terminal illness, nursing home confinement waivers that will essentially open up the accumulation value of the account value for the clients to get access to. Again, a step in the direction that GILICO is working on going to is a couple different things. e-app, we, again, going back to our AnnuityCare, everything being paper. In other products we've had, like some of our fixed index annuities that are all e-app, more of an enjoyable experience for our advisors and their clients through that process. So that's something that we're continually working on every year, is how do we adapt going to all e-app, obviously taking into account our relationships with all of our partners, and where they're at with things too. But to the start of 2024 here, we implemented our new transfer paperwork. It's our accord form, where now we don't just have our separate specific GILICO only transfer paperwork. We match what most other carriers in the industry are doing, which is using that accord form and yellow pages. What I will speak to that too is, we know back in 2022 and 2023, there were those MIGA fire sales. A lot of paper apps that came in, not just to GILICO, but other carriers. It created, again, that poor experience, elongated transfer times, processing of paperwork and so on and so forth. There are some proprietary fixed index annuity products that we offer that are only e-app, and we saw that we issued $1 billion of business in about a 3 to 4 month time frame total, which just was a nice reminder to us that when we do want to come out with other products, that we may also start to pull the field, if you will, of how effective is e-app versus paper app in your organization. Obviously, offering still a paper app option, but now having proof that e-app can provide a good experience for both the advisor, the carrier, the marketers, and the clients as well. But where is GILICO going to be able to help AIM advisors get more yeses than nos? That's really the philosophy when we speak to, where we want to serve towards more of that middle market that we're talking about. I'll speak to our fixed annuity. It's called our guarantee rate lock. It's our GRL. Obviously everybody's going to be bringing in various levels of understandings with fixed annuities, fixed indexed annuities. So I'll speak more on a higher level, and obviously would love to field any specific product questions on this call, or else can make sure AIM has resources as well for you to go back to. But complexity being the first word that we're seeing there. Whether you're speaking to clients who are looking for safer bond, alternatives to bonds or savings accounts for accumulation, well, our MIGAs and then our fixed annuities and our fixed indexed annuities are going to be a strong play, which I'll get into, why that's maybe potentially more beneficial for the client, as well as how it can complement you as the advisor into at least, hey, how do we present a fixed annuity or fixed index annuity that's GILICO specific if we find ourselves in those conversations. And then complexity on the and simplicity in on the income side of things too, which I'll talk to the updates to some of our liquidity features on both our products as well as income riders. But complexity, we've had advisors with other partnerships that we've had, and I know that AIM has written a couple of our fixed index annuities, for example, as well over the past 12 months. But in comparison to other fixed index annuities that are out there, that we've been told that we have one of the more simple ones to understand. So great for first time fixed index annuity writers who, maybe want to digest the information, right? And then feel like they can share this information with their clients, and the clients are going to understand it and be able to speak to it themselves. But as well as seasoned advisors who have maybe, gotten good at, let's just say, selling indices or these volatility controls. Hasn't necessarily been a huge market for that currently over the last 12 months, but some of the simplicity factors to how we handle the S&P 500, for example, only giving you a couple different strategies and solutions to offer to your clients has been received well on the simplicity aspect of it. And again, our fixed annuities, our MYGAs, we'll get into how those are probably similar to other fixed annuities you've used before too, with some unique features. Renewal rate integrity is a big one that we can speak to as well. Our Wealth Choice, our fixed indexed annuity, does have 100% renewal rate on its cap and participation strategies over the past 4 years since 2019. I will highlight that as well. Liquidity features, our Wealth Choice offers a 10% penalty-free withdrawal immediately year one, as well as an income rider immediately year one. And then our MYGA does offer 5% penalty-free withdrawal, or a fixed annuity offers a 5% penalty-free withdrawal to go with that too. So again, contrary to maybe a savings account or bond alternatives, is an annuity can give additional liquidity features that maybe some of those accounts aren't able to provide. You guys know that already too. Expensive, not necessarily the Wealth Choice. Our income riders will see some income riders will carry north of 100 basis point or a 1.25 fee, really drains the account with the benefit base. Our account being simple, we work off of the accumulation value. It's all performance driven, and our income rider has less than a 1% fee to it. And then loss of control, again, we offer some flexibility with our income rider that we'll talk about later in this presentation. So our MYGA, our fixed annuity, a great starter of a product in regards to getting introduced to GILICO, or even just presenting if we're looking at accumulation first, right? I'll keep it simple. We have a 3-year through a 10-year offering. Where our niche is I don't know how many know Naughty by Nature, an artist group, if you will, back in the 90s, and I may be even getting that wrong as I was born in the 90s, but they have a song called OPP. We refer to that as Old People Premium, here at GILICO. But we say that as we have our 3-year, 4-year, and our 5-year will write up to age 100 with a maturity date of 110. So we're not offering a product that's going to force the client to annuitize, let's just say in their 90s, where now they're susceptible to a major tax hit. Not a lot of carriers to write with, so on and so forth. Think of us as a nice alternative to a client you may run into who maybe has a forced annuitization at 95 or 90 years old. If they're in good health, relatively speaking, they're not in a nursing home, our 3, 4, and 5-year product can be a nice alternative in that space. Our rates will change from month to month, mid-month, not a ton. We're depending on what our goal is as a company, right? We may have some of the higher rates, in the industry, or we're going to be simply competitive. And I'd say that's currently where we're at right now, as rates are starting to drop. And then you'll see our options 6 through 10 will write up to age 90 here on the left side as well. So not that we want to pigeonhole ourselves on the fixed annuities as being a product offering for clients, a little bit later on in life, but it is a nice space to be in, as we are finding that clients are living longer, staying healthy, as you are all more familiar with than myself. So it's nice to have an option and to be in that space too. Our MIGA does carry, as I mentioned, a 5% penalty-free withdrawal feature, start of year 2. So after the first year, it is RMD friendly, to start the second year as well. Potentially with an LOI, may be able to be immediately, depending on the client's scenario and situation. And it's got a terminal illness, depending on the client's age when they start the product, could qualify for a terminal illness, nursing home confinement waiver. All these product at a glances we'll definitely share with Derek and the team, as they can share it forward on with the advisors as well. Next is going into our wealth choice, as I mentioned as well, which is our fixed index annuity, where there's just a lot of excitement around the industry currently with how we're showing up both on the accumulation side of things, but as well as on the immediate income play. Again, if you run into clients that are a good fit for that. What are our offerings here? We have our 5-year and 7-year. You'll see on the left-hand side here. Again, we do issue up to age 90, so we are issuing maybe a little bit north of some of the other carriers out there. And then our 10-year comes with 2 different options. We have a non-bonus option, and then we have a 10-year option that comes with the premium bonus feature to it as well, and I'll get into more what those details are. Again, all these options do come with a 10% penalty-free withdrawal feature. We do have 110% death benefit enhancement feature, which essentially is an enhancement to the death benefit if the client were to pass away and their beneficiary were open to accepting the payouts over a 5-year period or more. GILICO will calculate the math and pay out 110% of what that death benefit is at the time of death versus just what the accumulation value is. So a nice feature there if the client's looking to and open to accepting that over a 5-year period. And then optional GLWB for simplicity is our income rider. We do offer that on our 7- and 10-year option, and we will write that up to an 80-year-old also. Again, not just trying to sound like a rate jockey here, but we'll just go through the rate sheets here and hopefully answer some questions at the end. Where we're winning on our fixed index annuity and where we have been for the last 12 months is our rates have really been the same for 12 months in a row. So we've been hungry for premium in this space. We like where our cap rates are out at, our fixed rates at on new business and so on, to match up with the renewal rates and so on that I'll talk about. 5-year, we're competitive in, we'll be in that space. Let's just say you might have a client who is more interested in a fixed annuity, maybe transitioning into a 5-year FIA if they want to take advantage of more of the market upside, right? No down risk. We'll look at the average, what the S&P's averaged over the last 40 years to also be able to speak to where our rates at. But an 11.65% cap rate, S&P 500 annual point-to-point cap on a 5-year FIA is competitive. I believe it's one of the top in the industry right now on the 5-year mark without a fee. Having an annual point-to-point participation par rate of the S&P at 50% has been competitive as well. Again, going back to the simplicity of our product, if I'm looking at just our 5-year, we give you 4 allocation strategies to choose from on a 5 if you include our fixed rates. So relatively simple. You're not seeing a lot of vol controls being thrown in here, or Black Rocks or some other ones that, again, have a place within the market at the expense of maybe an advisor's comfortability level explaining it to a client, right? We keep ours simple. We do offer a vol control. It's shooting for a 5% return at a 5% volatility. It blends really well. It's nothing that's taken into account a lot of flashy algorithm, if you will. Hasn't been a huge great year for it, which is why we usually tend to point towards more to the S&P 500 cap rate, which we'll get into why we are pretty heavy in that space. You'll go to our 7-year. Got a cap of 11.95%. Again, we're able to max that out. Client's going to get double-digit returns on a 5- and a 7-year FIA. Wasn't heard of years ago, and now we're at the top of the industry without a fee, especially of offering those double-digit rates with 100% renewal rate history since 2019. In our 10-year product, you're going to see double-digit cap rates again on the non-bonus option of having a 12% cap. And then the most popular story has been our 10-year FIA electing the 5% premium bonus feature. So that's at no fee, so the client can get a 5% premium bonus immediately day one to their contract, and then they're also getting a 10.75% cap rate to go with it. It's the highest cap rate in the industry currently on any premium product, any premium bonus product out there currently. And again, these are where the rates have been for really going on the last 12 months. I haven't really seen a month now in the last 2 years, going on 3 from what I'm told, where we haven't either been number 1, 2, or 3 in the cap rate space without a fee over the past, like I said, 2 to 3 years. New business rate on our fixed rate, 5.25%. That's a competitive place to be there also. As I go through the slides, again, if any questions come up, feel free to let me know. Touched on our renewal rate history. We do have a flyer to go with this, but just how we're able to maintain our cap rates, if you will, our S&P 500 cap rates. It's our conservative approach to how we handle our call options on the front end. There's a lot of working pieces in regards to that based on where the Fed's at. I can confidently tell you we got into this space when we launched this product at the right time, right? In 2020, when it really started to take off, we didn't have a lot of policies on the books that COVID affected, right? Like every other carrier, if that was our story, we wouldn't be sharing 100% renewal rate history. We just weren't affected by that. So we can't guarantee that this 100% renewal rate history is going to maintain every year going in and out. But based on how, our company is growing at an organic and conservative pace, renewal rates are a huge priority when it comes to pricing our call options to maintain and back our ratings, if you will, as we go into it. And we're pretty upfront, with our new business rate on the fixed side. If I were to go back, this is the new business rate. When we're selling the fixed index annuity, it's nice to highlight the fixed rate, but we also want to make sure that we're treating this as this is an opportunity to take advantage of the market potential. Having double-digit cap rates on all our offerings is great. To maintain that, we are pretty upfront that year 2 or year 3, we are probably going to start to see that renewal of the fixed rate probably start to drop. So how do we safeguard against that or provide some peace of mind? We have a lifetime guaranteed minimum on our fixed rate of 2.75% for the contract in that fixed rate. Again, I wasn't in the industry 10 years ago. Who knows what things will look like 5 or 10 years from now, but I know in other conversations I've had with advisors, it's a nice safety net to be able to point to, hey, worst case scenario, 5 years from now, 10 years from now, 15 years from now, you're still going to have a fixed rate of 2.75%. Guaranteed on that fixed option. Again, the reason we like to put a lot of emphasis, we want to kind of be known within your product offering, right? If I'm looking for a strong accumulation or an income play and I want to put it towards the S&P 500, let's say, think of GILICO. That's where we want to help you win business, right? We look at the last 40-year options. I know this only runs to 2022. This isn't a GILICO specific or branded chart here. It was just one that I found, but when you look at numbers, they do run pretty much identical in regards to the price return index that's out there. Last 40 years, it's averaged about 11% return. 83% of the time here, based on this chart, the S&P 500 is positive. About 76% of those positive years, it's positive double digits, right? So if we know that over a 10-year span, the S&P 500 is going to perform positively historically, right, over the last 40 and 60 years, 8 of those 10 years, maybe 7, depending on the stretch that you're looking at, and 3/4 of those positive years, it's going to be a double-digit return. Again, historically, that's why we like to put a lot of emphasis into being a nice solution on the accumulation and income side of things towards with a high S&P 500 cap. Again, wealth choice consistency, where we're seeing some bullet point victories, if you will. Industry leading cap on the S&P 500 on our 10-year at 12% with no fee. There may be some other ones that are higher, but they do come with a fee. A competitive 1-year fixed rate of 5.25% with a minimum renewal rate lifetime of 2.75%. We've got strong renewal rate history, and that's where we're feeling like we're we're being able to complement what other good products on the FIA side or fixed annuity side that you have access to. Most popular story has been our Wealth Choice 10 with that premium bonus option. So taking a 5% premium bonus, adding the 5.25% fixed rate, you can guarantee your client a 10.25% return year one. So where does this work great in? Whether it's renewals, replacement, we're running into a lot of that too, which is why I wanted to add a couple slides into replacement business. And some advisors don't necessarily like looking at it this way, but if you are able to increase, let's just say your client's current, let's say you're meeting with a client, they've got money in savings or another account that isn't earning anything, even though they've been in it for a few years, and you can more or less take the surrender fee and value that they're going to be facing by moving it, but replacing it with a guaranteed 5% premium bonus and a fixed rate, and you can get them into, let's just say, a cap rate that's 5 or 6 or 7 points higher than what they're currently in. A lot would argue you're putting your clients in a better situation, and that's why we want to be competitive in this replacement space as well. So how we're able to do that, we got a 5% premium bonus right up front, day one is for the client. That comes with no fee, guaranteed 5.25%. A fixed rate for that 10.25% guaranteed return year one. Great for replacement business, great for first-time writers, especially on the income side of things. So if you're talking to clients, you're going through your book, you haven't already looked for opportunities there, we may be a good fit. I'll speak to some of our surrenders schedules as well. We've got that 2.75% minimum renewal rate on our fixed rate. The 10.25 with the premium bonus does come with that 10.25 cap rate, which is the highest cap in the industry, and that will also carry a 45% S&P participation rate as well. Some of our suitability, if you will, when looking at replacement and where we're going to win that 10% with that 10-year with the 5% premium bonus version. We do have an 8% max surrender rule. Essentially, we'll take up to a net 3% loss if you're looking at any replacement business. We do like to see 50K, in liquid assets. Again, that's a moving target we can always work through. We do like to see that the product's at least 2 years old. If they do, we will take products with an income rider or accumulation value or a PIV, if that makes sense, as long as there's a written LOI to go with it. So the big thing on transition rules that we're looking for, it's got to be at least 2 years old. And on the premium bonus option, it's got a max of 8% surrender, and then the non-premium bonus, it's got a max 5%, or at least essentially net wash with our fixed rate, if that makes sense. Why the Wealth Choice with the bonus is you're going to see there's no fee on the bonus, so that 5% is the client's. They're not giving up anything for that. The only fee our product will carry is if you turn an income rider on. No chargeback on the bonus recapture for the first year, withdrawals of up to 10%. So as long as the client's staying within the provisions of the contract of a 10% penalty-free withdrawal, there's no chargeback or bonus recapture on that. No withdrawal restrictions for anything up to 10%. Again, the true cash bonus, it's the client's day one. It's not anything they have to wait for a whole year. The interesting crediting solutions go towards the client's 100% premium they put in plus the 5% premium bonus. Index renewals are holding steady since 2020, the start of 2020, and then that strong minimum fixed rate of guaranteed of 2.75%. Like I mentioned, we're running into a lot of replacement business. We have a proprietary product, and that's where I'm pulling these numbers from, that has a 12% premium bonus. But generally, when you're getting one, you're giving up the other, right? Whether that's coming down to liquidity features, the cap rates they carry, renewal rates, whatever the case is. So this is taking a look at our Wealth Choice 10 with the 5% premium bonus with the 10.75% cap on the left, comparing it against our big bonus product that has a 12% premium bonus, but is coming with a 7.5% cap. This isn't necessarily your story, but there are some advisors out there that get excited about the 12% premium bonus. Understandably, it is going to help maybe the client more on the front end, but sometimes it's hard to look past maybe those first 2 years, or in every scenario I run a comparison against because of the higher cap. If we're looking at a mid-range 7 to 8 to 9 or 10 years and beyond, our 10.75% cap is always going to pace out, for example, our 12% premium bonus, just because those cap rates are that much shorter. And with the positive double-digit cap here as S&P 500 has performed over the last 40 years, that's where we're seeing, just based on the annualized return, a higher cap product. Again, with a 5% premium bonus with no fee, will in most cases outperform those premium bonus products that maybe have a double-digit premium bonus to start. Just comes down to what the client's looking for, right, as well. So always like to highlight that. That's where our Wealth Choice can win, even though there are some other higher premium bonus products out there. Again, this breaks it down a little bit more. We have our Wealth Choice 10 with that premium bonus on the left. The first column is the best 10 years. The middle column is the worst 10 years over the last 20 years, and then the last column is, or the third column is the last 10-year period in that 20-year period, based on that annual rate of return over those 10 years. So our 10.75% cap over the best years will illustrate showing an 8.48% return. Again, still with strong liquidity features. Worst 10 years is a 6.84%. Last 10 years is a 7.38%, and then these rates below are on a 7.5% cap rate instead of that double-digit one. So a little bit lower, which is why you can also see that that higher cap rate's always outpacing a mid-range cap rate, even though there's a higher premium bonus on the front end. What's changed here as of April 1st, and these were enhancements we started advertising March 1st, so I apologize about that, but our income rider was increasing. If you're familiar with our product, it had a deferral of 4 years initially, so you couldn't turn the income rider on until the 4th year. Where we're at now is we're getting now into that immediate income space, where now your clients can turn their income rider on if they want immediately year 1. I always like to highlight age 65 just to keep it simple. So we used to be at 6.5% on our income rider if you were to turn it on at 65. Our payout factor is jumping to 7.6% now. So if we're looking at an immediate income play, whether it's on an individual or a joint, currently, we're about 10 to 15% higher than the next closest carrier out there. You know, I do a lot of comparison looking at F&G products, as they've got a relatively safe and well-known income play. That 7.6% is going to be the highest immediate income payout factor that's out there. We don't reduce for joint, as you're seeing on the right-hand side too, which also puts us in a strong category as well. That's whether it's qualified funds or non-qualified funds, we can set up joint income riders as long as the primary beneficiary is the spouse. And we'll get into some more examples there too. Where we're also finding a lot of excitement around, and we'll talk to, is on our increasing side. Again, not sure how much opportunities on increasing income will come up within the cases you work on. But on age 65, again, the starting payout factor is 5.95%, and we have a guaranteed 3% step up annually every year after that too. So it puts us competitive in that space if you got clients who are concerned about inflation, cost of living going up as they age, so on and so forth. Here it's just again talking about the power of our income rider. Obviously, immediate income, you may find that whether it's Annuity Rate Watch you're using or some other of those third-party resources, we're going to show up pretty early on the immediate income. But there's also powers to, let's just say, taking a 10.25% guaranteed return year 1, right, on our 10-year product with the premium bonus, and then waiting a year and seeing what that does to the income payout factor for life, and so on and so forth. Don't want to spend a lot of time and beat a dead horse, if you will, over this aspect, but there are some powers with where our payout factors do line up, as we let those accumulation values start to increase with our double-digit cap rates or our fixed rates, and so on and so forth too. But the other aspect on that increasing income side of things is coming down to a statistic I remember reading a little while ago. It was a Fidelity article, but it highlighted on the left, you're seeing here too, for a couple at the age of 65, if we're looking at a couple, at least one person on average will live to about 93. Right, so that's where a power of an income rider can potentially come into play if a client's looking for income for life. What's unique about Wealth Choice is if I were to go back to our rate sheet, is you're also going to see that we're still carrying double-digit accumulation values. So if we're going head-to-head against an income-only product, especially if they're deferring 4 or 5, 6 years, we're going to get beat. That's not where we're going to win. But where we're going to beat them is they may come with a 2% cap or some hidden features there, higher fees. Our fee is 0.95%. It's got a 5th-year return of premium option, so if the client wanted to move it, they could. They can shut off the income rider. If they terminate it and don't want to pay the fee anymore, they can't turn it back on, but the client can choose whether they want to use it 1 year to the other as long as they keep it active. And we'll pay qualified money out with a joint income rider as well. So speaking towards that age 93 that we're seeing here, I'm seeing some cases here where we're helping clients if they've got qualified pensions, they want to have the opportunity we're able to significantly pay out more than maybe what they're currently running into. So always like to highlight that, especially as we go into what's inflation look like, right? And this was a slide put together by Joe Schaefer, your primary account manager. So I can't speak to the last item that we're seeing here listed as well, but he worked at a gas station and remembers selling this for almost $3. But anyways, price a gallon of gas in 1997 on average was $1.23, right? Inflation here in 2024, $3.30, 268% increase. We look at a carton of eggs, it was $1.06 back in 1997. Now it's $2.52, obviously depending on the type of eggs you're buying, 237% increase. Gallon of gas, or milk, $2.61 back in 1997, it's $4.30 now. And Joe Schaefer can remember working at this gas station near a golf course. He could sell a Mountain Dew for, I believe it was 90 cents, and the pack of Marlboro Lights was $2.10. Now, if you go see what that looks like, $8.39. 279% increase. Really what that's boiling down to is inflation. And it's more of a concern now for clients, whether they're looking at income riders levelly, we can work through that, but this is where our increasing option could potentially be a good fit for those clients who are concerned about, hey, I want to set up an income stream, but how does it pace with inflation and so on and so forth. At age 65, like I said, as an individual or joint has a starting payout factor of 5.95%, and then has an increasing guaranteed step up of 3% annually, regardless of the account value amount too. So if we're running illustrations, whether it's your AIM team running those, or if they get back to us on our sales desk side of things too, you'll start to see that there's a break-even point relatively somewhere between the 8 to 13 year mark, where again, depending on the client's age, when they're looking to turn income on, we can definitely outpace anything eventually that a level payout option is giving them, especially as they age, and if that fear of inflation is there too. I know we probably all know some individuals that maybe have worked really hard their entire life, but their pension only pays out one specific amount that is level for the rest of their life, Social Security and so on and so forth. And now they're in their 70s, their 80s, and they need a part-time job, whatever the case is. And if that's their fear due to a levelized income option, then the increasing can be a good solution there for them too. Next slide's just kind of showing up how we're comparing against some other income option plays out there with other products that are out there competitive in the income space. Don't need to look at that too much. But again, the power of our double-digit caps, you can have a strong income option, but still have that double-digit cap rate of 10.75%. Again, if our renewal rates line up and hold, should be 10.75% for most of that contract so some strong accumulation growth to go on top of income plays. Another commission enhancement or bonus program we ran last year that we had really great success with, so we're running again this year too, is based on fixed index annuity production. At 1 million for the year, you can earn an additional 50 basis points based on just FIA business paid out. It's retroactive. 2 million bumps up to 0.75%. This is all on the agent level, and then 3 million is a 1%. Or 100 basis point additional commission paid out. We pay those out quarterly. You can reach out to your AIM team in regards to where rates may be on a street level side of things, but we do like to highlight that as we had a lot of success with it, all based on fixed index annuity business with us for the year. Again, to wrap things up, where do we win? We're a simple solution. Not a lot of moving parts tied to our fixed indexed annuity on the wealth choice side of things. If a client's looking to upgrade their existing annuity because of poor performance, don't need an income rider anymore, or they don't like the cap rates they're currently at, we can be a good fit potentially. Couples starting to look at joint income, we don't reduce, so we can be a strong player there. And then early income, immediate income, deferral of a year or two, we're going to be tough to beat with our initial payout factors. But with that, if there's any other questions that you do have, I appreciate you allowing me to be on the webinar this morning, but reach out to your AIM team for more information, whether that's rate sheets, whether that's illustration tools that you would have access to, or any other product information that you have to. And then my contact information is below. And with that, that's my last slide. But if there's any questions, be happy to answer any of those. If not, definitely give you guys 10 minutes of your time back. So thank you for having me.
Perfect, thanks. We do have some questions that are pretty specific, so we'll kind of get into those with some follow-ups after. But you know, I'm glad you took the time to come on here. I've always really liked your guys' product for a lot of the reasons you got into. I mean, for anyone who's been in the industry, obviously they can kind of really see where you guys are going to stand out. For those of you who are looking to get into this industry for kind of a first time, that simplicity that Curt was talking about and not having to get into a whole bunch of hidden fees and different areas and really kind of diving deep and then trying to explain that to your client is really going to help out as far as is positioning the product for your client. You know, I don't know how many times I spoke to clients back when I was advisor, and just taking the time to really explain what's going on was one of the main reasons they ended up, you know, choosing me and going through me for their money and investments, because a lot of other advisors just say, trust me and give me the money. So it's nice to be able to explain the products, you know, with the simplicity that you guys have, as well as that double-digit caps that you guys kind of have there. I mean, most people know if you leave money in there for a while, it's going to rebound and come back. So taking advantage of that for, you know, those years where the market really does rebound is nice to have, you know, those 3.25 extra percentage points sitting there. So as you illustrated, it can really make a difference for how that's going to grow for the clients. But yeah, I really enjoyed the presentation. I want to say thank you again to Curt for coming out here, and then I'll follow up with those specific questions, you know, here in the next few hours with the callbacks, or by tomorrow. And I just want to say thank you for everybody for being here, and I hope you all have a great day.
Yeah, thanks, Derek. Thanks, everyone. Appreciate you guys giving me the opportunity to share where we're winning this year. And ultimately, we just want to be a good resource and complement what you guys are doing great already. So look forward to hearing and seeing those questions, Derek.
Perfect. Bye, everyone.